Happy Friday, everyone. I wanted to give you a quick overview of how mortgage rates have been behaving as of November 22nd to December 24 and how things are working in regards to this election results. Okay, so this chart itself is showing 30-year mortgage, which is in blue, 15-year mortgages, which are in black. As you can see, there's a big difference in interest rates. And then you have jumbo mortgages. Jumbo mortgages are conventional loans and they have different rules. And as most of us know, most of us do get a 30-year mortgage, right? We have conventional loans, we have government loans, and now you're learning also that there's jumbo loans that have different rules. And as you can see, the rates fluctuate. You can see that there was a big dip here but then back up. So the volatility is here because of a lot of different factors. So right now, as of November 25th, you have Fannie Mae, MBA Mortgage Brokers Association, Wells Fargo, and they're saying, hey, what are the rates going to be moving forward? Now, mind you, these are just forecasts, right? We're not going to know what's going to happen until it actually happens. The Fed were supposedly going to do a 0.25 decrease again, but we'll find out if it actually happens. So Fannie Mae, MBA, and Wells Fargo, this is what they're saying for Q1. These are what the rates could be and are. And Q1, Q2, Q3, and Q4 of 2025, as you can see, all of these are still reflecting 6%. Not 5, but 6. So what is really affecting a lot of the volatility that's happening right now? Okay. So remember, those are forecasts. So don't try to just use that one thing to base what's happening, because if you have to sell to buy, you're going to have to do what you need to do in order to get that done. If you're a first-time home buyer, are you sitting on the fence waiting to see what's going to happen? My recommendation is, if you find a house you like, then you have to decide on what are you willing to do to get it, because at the end, it seems like prices are continuing to go up. And with the volatility of interest rates, they seem to be staying in the sixes. Okay. So with that being said, what are the key factors? The key factors are inflation. As you know, the Feds want what? They want inflation to be at 2%. We're still not there. It keeps going up and down, up and down. What's the biggest problem that we have? We spend too much money. Are we bringing in enough money? Right? Because we're in a big deficit right now. So you talk about inflation, not only are we going through it, but also the government, right? How about unemployment? Well, unemployment is really important as well, right? Because the higher the unemployment, that means there's less people working, right? The lower the unemployment, right? The more people that are working in our world. And then lastly is government policy. As we have heard in the news about the tariffs, right? We're going to be tariffing all of these exports, imports, because that's going to affect us as consumers, right? Are they going to be lowering taxes? Are they going to lower it for us? They're going to lower it for the government. They're going to lower it. Who are they lowering the taxes for? And if they lower the taxes, is that money that we're not getting going where we're going to get the money, because we have a high deficit, right? So all of these different government policies as of now, because everything we got to wait until January, once things start getting into place, then hopefully we'll see some sort of what? Some sort of stability, right? So while the mortgage rates are, as Anar is stating, remains elevated, they are still expected to stabilize in the near future. So remember, right here, right, they're stating, right, again, this is just a forecast that rates are going to stay in the 60s. So let's prepare for that. And what can you control? Well, you can control, making sure your credit scores go up. Can you start saving, right, with the way inflation is? Saving money for your down payment, for closing costs, looking for other opportunities to do whatever your goals are. If you have any questions or concerns, feel free to give me a call, 619-846-2675.